Hi, this is Binu from JRG Securities. Buy CCL products at current market price and on any dips to 22 for a medium term target of 35. CCL product produces international quality soluble coffee which is currently being exported to more than 60 countries around the globe. The company is into importing coffee beans, processing it and exporting it. Almost 90% of its turnover comes from export. And when Indian currency comes at all-time low, being a 100% exported oriented unit, the company is benefited. In financial year 2013, the sales were up by 19% and net profit up by 49%. The market capitalization of the company is at 340 crore. The promoter holding is 40% and institutional holding 14%. The stock is trading at a trailing P ratio of 5.5 times with a price to book value of 1.1 times. To increase the floating stock, it has recently declared a bonus and stock split. CCL Products, promoted by Mr. Challa Rajendra Prasad in 1995, who has more than 20 years of experience in international coffee industry. He had been the promoter and former managing director of Asian Coffee Limited, which was subsequently taken over by Tata Group, and now it is part of Tata Coffee. CCL Product has adapted Swiss and Brazilian technology, and it has enabled company to produce international quality soluble coffee. CCL is not only India's largest coffee processor, it has world's largest single location plant and is amongst the top 3 private label instant coffee manufacturers with clients across the globe. CCL has currently got 3 plants. One is at Guntur district in Andhra Pradesh, second is at Switzerland, and the third plant at Vietnam just got operational about a few months back. CCL has completed the expansion of its capacity. This will enable it to record volume growth over the coming years. The company's main idea of starting a plant in Switzerland is to get access to European markets, which is one of the leading consumers of coffee, and also getting the tag of made in Switzerland, which enables the company to price the product at a premium. The Vietnam plant will help the company to gain easy access to raw materials because Vietnam is the second largest producer, accounting for 14% of world's coffee production. It also helped the company to save the transportation costs. The company is exempt from paying income tax for the first 5 years of operations in Vietnam. The coffee market is expected to grow at an annual rate of over 2% per annum over the next 5 years. The soluble coffee consumption in India is expected to grow at 3.9% over the next 5 years. In domestic market, it has recently joined hands with a number of retailers to sell its coffee under retailers brand. With world-class facilities, India's cost advantage, recent forays into Switzerland and Vietnam, CCL should be able to increase its current market share. The 2 overseas plants could contribute to the consolidated revenues of the company. In FY14, we will have the full impact of Vietnam plant and the EPS could shoot up. The company could show considerable growth in its top line due to the impact of rupee depreciation. So buy the stock for a medium term target of 35. Disclaimer: investors may note that neither JRG Securities nor any persons, associates or any subsidiaries accept any responsibility for any potential loss arising as a result of use of the data, information or views expressed in this report. The recipient is requested to seek independent expert advice prior to acting in this report.